April was an amazing month for Team Integrity, and I'm so proud of Michelle and Sean and the team here because, we helped more families in April than a lot of loan officers helped in all of 2025 so far. I'd just like to tell you 4 quick stories of 4 of those borrowers. First of all, we had what we call across the country. We had Richard and his family moving from Florida on the Gulf of America coast all the way here to Sacramento, California, so that his boys, who are both college age, could attend college. One little hang-up: he was pre-approved by a national lender who didn't consider the fact that that geographic distance meant a change of employers. So we were able to work with him and coach him along and help him with a position here in California so that he could qualify for the home and then close escrow. Another great example was a first-time buyer. He was so unsure of himself, but he had been studying and he looked at a hack of buying a house with an ADU to help the rents cover the mortgage. We were able to explain to him how that would work and structure the transaction, and I often encourage single first-time home buyers to consider buying a duplex or a triplex with an FHA loan for exactly the same reasons as we discussed with Adam. And now he's a homeowner and he's a landlord. Third great example was a little bit different. It's a boomer, and she is now a single mom with a kid that's college age, but she loves horses and she was used to having a larger property and she had the resources to do it. Oh, by the way, she was also self-employed. The easy route for a lot of lenders is to just use bank statements. But Yvonne was making more than ample income to qualify using traditional documents like tax returns. And as a result, we got her the best possible pricing on the home of her dreams in Granite Bay. And then last but not least, families do help families. My kids all got a little bit of help when they bought their houses. Well, it was the same for Richard and Ellen. The parents of Ellen were more than willing, they'd been renting the property to their kids, to turn that into a purchase so their kids could own their first home. And we helped put that together too. 4 great examples of why and how starting the path of homeownership is so important. Now I'd like to move to a different topic, the topic of refinance. And I'd like to talk a little bit about interest rates and history. Interest rates from 2000 to 2010 were around 5 to 7%, and we all thought that was normal. Then from 2010 to 2020, because we had very low inflation, interest rates migrated slowly down into the 4s and mid-5s. It wasn't until the government put their thumb on the scale that we saw rates in the mid-3s to mid-2s and under 3%, and that was only for 2 years. Do you realize that it's been 3 years since then? For the last 3 years, rates have been materially higher than 5%. For the most part, they've been 6.75% to 8%. So some of our clients who have bought homes during that period should be ready and poised to consider refinancing because rates are going to drift down in 2025. We need to have a conversation about a strike price. And I don't want to talk about interest rates here. What I want to talk about is what is a meaningful reduction in house payment in your household's budget. Because a meaningful change in the mortgage monthly payment is what the objective is. And if we can do that and recover the costs in a 24-month or shorter period, and you're going to be remaining in that home, then that's the right decision for your family. We use a tool called the total cost analysis. Some of you saw it when you bought your home. Not everyone did. But we'd like to introduce you to it if you haven't seen it. And since you have seen it in many cases, you understand the importance of that tool so that you can totally weigh the costs and benefits of when to pull the trigger and refinance your home. And that leads me to my final topic today, and that's the general overall topic of the economy and some important things that we're seeing in terms of trends. First trend is that home purchases are slowly increasing. Okay, life happens. People are making decisions for life decisions. The interesting thing is that the move down market is much more common than the move up market. It's very hard for a family if they have a 4% or lower mortgage, even if they've added kids to the household, to consider buying with rates in the high sixes and get a bigger house and a bigger mortgage. But many boomers, my generation, are looking at that big home that they're rambling around in, and for lifestyle reasons or for reasons to get closer to kids, or perhaps just because they don't want to clean a 4,000 foot or a 3,000 square foot home anymore, they are downsizing. 40% of the resale market today are boomers listing their homes and selling and downsizing. That's what has been an important aspect of the market. In some cases, we call them sinks, single income, no kids. But they're not all single. They definitely are all boomers. And then let's talk about the first-time homebuyer. The first-time homebuyer today's average age is between 35 and 38 years old. They're not in their 20s like my generation when we bought our first homes. Now, there's a variety of reasons for that. But I think one of them is lack of financial education. I think another is the fears because they were teenagers when their parents went through the trauma of the only drop in real estate prices in our lifetime, 2008 through 2012. And then probably the biggest single factor is that they don't feel there's somebody to talk to. That's why having a trusted local mortgage advisor as opposed to a 1-800 number is the difference between getting all your questions answered and not having them answered. So if you have somebody that you know that you care about that's in that age range and they're thinking about buying their first home, please introduce them to Team Integrity. We love working with them.